Welcome to Q2's Getting Paid webinar. We do appreciate having you with us here today. And for those of you who have not met me before, my name is Anne Cooper-Smith, and I'm the Director and CEO at Q2 and today's presenter. So Q2 Limited are a boutique firm of business strategists and chartered accountants, and we're passionate about helping SME business owners achieve their business and financial goals. Our brand, Q2, refers to Stephen Covey's Quadrant 2, which is about doing what's important, but not necessarily urgent. So check it out on our website if you're not familiar with the Q2 story. So Q2, we have a diverse range of clients, which makes each day really interesting and different. Our clients include one-man bands through to larger SMEs that are employing 20 or more staff. We have clients who are startups, as well as those who are established businesses. And we have clients who are very profitable, as well as those who are getting there, but are not quite there yet. We help our clients in a range of different ways, but our most successful clients work with us closely on things such as business planning, problem solving, cash flow improvement, tax planning, business structures, and of course, we provide annual accounting and tax services. So before I get started, I just wanted to mention that we currently have the ability to take on new clients, and we would welcome the opportunity to have a conversation about how we may be able to assist either you or perhaps someone you know who needs expert advice at this time. So please do get in touch if you'd like to have an obligation-free chat about your own particular situation. So thanks again for making the time to listen to this important webinar about cash flow and getting paid. We appreciate that we all continue to face difficult times with great uncertainty, and it's a concern for all of us. And we want you to know that we're here for you and we can give whatever support we can to get you through these difficult and uncertain times. And as I've already mentioned, Q2's core purpose is helping business owners succeed. Most businesses fail because they run out of cash, not because they're necessarily unprofitable. And over the years, I've seen a number of businesses fail because their business model was unsustainable, not necessarily because they were actually making losses. So with our core purpose in mind of helping SMEs succeed, I'm here today to share with you some of the practical things that you can do to minimize the downside on your cash flow. And this is particularly important with the uncertainty we're facing, and as we move closer and closer to a possible recession that many are predicting, and in fact many say we are already entered into. Before I kick off, I would want to give you a thought for the day. So a thought for the day is, when a recession does materialize, as many experts agree, ready cash is the oxygen that every small business owner requires to survive. So Richard Branson, who's a business super achiever, he also says that never take your eyes off the cash flow because it's the lifeblood of the business. Amen. I'll vouch for that. Of course, managing cash flow can be very difficult, but today I want to share with you some of the practical things you can do to preserve and improve your cash flow and ensure you get paid. So what we're going to cover today is, first of all, the required mindsets that you need in order to manage your cash flow. We're going to talk about your debtor system and some of the lessons that we can take into the future. We'll talk about some of the support that's currently available and what your next steps are. And as I've mentioned, there's opportunity to ask questions via the Q&A button, but also at the end in the survey that we'll be sending to you. So with the thought of your day in mind that you should never take your eyes off your cash flow, and before we talk about specific strategies that you can adopt, let's talk about the 3 mindsets that you need to have. The 3 mindsets are empathy, and you must approach your debtors management with backbone and heart. And also you need to realize that it is actually okay to sell in these times, so long as you are solving problems for your customers and those problems that they have right now. In previous webinars, we've talked about the energy of putting your oxygen mask on yourself first in time of emergency, that you need to put your own oxygen mask on first, because if your business falls over, then no one wins. So let's have a look at this first mindset about being emphatic. I mean, we can't just say, okay, right, I'm going to put my own oxygen mask on first. The customer needs to pay, or we're not going to provide services or support. And to be honest, we've heard some horror stories of businesses who are stopping credit and ramping up their debt collection without any thought for how their customers are coping. And this is just plain dumb, because we know the lifetime value of a customer is huge, and the brand damage that follows from adopting such an approach. And we also know that each aggrieved customer is likely to tell at least 7 others of their poor experience. So we can look on that approach as a negative marketing, and none of us need that. And we know that approach isn't for you. So before we work out the best way to keep the cash flow going, we need a framework. And this framework starts with empathy, which we define as the ability to see things from our customer's perspective and be prepared to do something about it. So from a practical perspective, how can you be emphatic? Well, firstly, ask your customers, how are they and how are they coping? How's their business going? And be involved and listen fully and show that you care. Don't just go through the motions so you can then ask for payment. You've got to be present and you've got to be human. So then think about, how long has this customer been with you? If they're a long-time loyal customer and that you know really, really well, that will influence how you respond if they're having difficulty paying you. But in any case, you need to be respectful. Put yourself in their shoes. And this leads to the idea of giving customers options as to how they can pay you, perhaps, because what we're doing here, we're really looking for win-win solutions. You need to make sure that your administration and sales team are working through this framework as well. Ensure that your communication with them is very clear. You do want to get paid, and you do want to ensure the long-term goodwill of your loyal customers. So make sure they understand that and that they're on board. The second mindset that I want to talk about is having backbone and heart. So long as we're being emphatic and giving clients choices, we can talk about how we're going to get paid. But when we're talking about backbone, we're explaining to the customer that, hey, we're running a business too, and we have staff and rent to pay, and we provide good value, and we need cash to be able to continue our own business and to support our own families. So that's the message you need to give to your customers when we're talking about backbone. And then when we talk about heart, it's more about how we're being emphatic, flexible, respectful, and considerate in your approach. Because as I said before, we're looking for win-win solutions for everybody. And then the final mindset to have in these times, and especially if you're a service provider, is that, hey, it's okay to sell. I think many of us are feeling a little bit difficult selling at this time, but so long as our product or service is solving a problem for our customers, and so long as we're going to get paid for the work, then it's okay to sell. The spin sales approach has been around since 1988, and it's a really powerful way to approach sales at this time, and particularly in the current economic environment. It's basically a line of questions, starting with situation questions and then moving on to problem questions. So the SPIN is an acronym for SPIN, which is situation, problems, impact, and then needs. This is a really, really famous sales technique. So let's have a quick look at an example. So let's say you're a hairdresser, and let's see how a hairdresser might be able to use this spin technique with their own customers. So the first thing is the S, which is developing the situation. So you might ask your customers questions such as, hey, how are you coping with work right now? And then maybe you might ask them, are you spending more time in Zoom meetings or face-to-face? And then another question might be, are you challenged by work, by trying to get to work or do work as well as homeschool the kids? And so on. So ask these sort of questions to get to know where the customer is sitting. And then you can move on to the P, which are the problem questions. So you might say things like, hey, when you're in a Zoom meeting, there is only your face and hair showing. Do you sometimes feel that maybe you're having a bad hair day? Or you could ask something like, do you feel stressed trying to do everything and wish there was a way that you could avoid bad hair days? And then maybe you could ask something like, do you feel that every day is potentially like a bad hair day? So once you've gone through the problem questions, then you can move on to the I questions, which are the impact questions. And you might say things like, well, when you're having a bad hair day, how does it make you feel? Or you might say something like, how do you think others perceive you on a Zoom call when you're feeling self-conscious or having a bad hair day? Or even maybe a question such as, do you feel more confident and competent when you're looking your absolute best? So these are all the impact type questions that we could ask if we were a hairdresser. And once we've explored the impact of not looking our best, then we can move on to the N questions, which are the needs. And you might say something like, I know we can't be certain what's going to happen next, but to help you deal with the stress and pressure more confidently, perhaps we should book you in for a full makeover. Or you could say, maybe something like, we also have some products that would be perfect to quickly tame your bad hair day before a Zoom meeting, and so on. So obviously I'm just having a bit of fun here, but what's important to understand is that it's absolutely okay to sell, so long as what you're selling is linked to, and you're offering as a way of solving the current problems that your customers are facing. Okay, so let's move on and talk about your debtor system. We talked about the 3 mindsets. So now I'm going to talk you through the best practice with your debtor system, and I'll share a guide and some scripts, and then I'll talk some more about different credit control services. So with best practice, essentially nothing should change as a result of the COVID-19 situation we're in at the moment, but as I've already mentioned, we do need to dial up your empathy. By engaging more with your customers around their particular circumstances, you can tweak your processes just for those clients who are going to struggle to pay you. And remember that not all your customers are at great risk here. In fact, some businesses are doing really well as a result of COVID-19. COVID-19 should not give them an excuse not to pay you. You've done the work, or you supplied the product, and you're running a business, and it's important that you get paid. You should all be running paperless invoicing and debt collection systems, and if you're not already doing so, then I think this is going to be your top priority, or your customers simply won't know how much they need to pay you. At present, we're in lockdown, and if you're not paperless, it's really, really difficult to run your business. Best practice credit control is that you have great guidance notes for your team who are responsible for your credit control and debt collection. You need things like flowcharts and scripts and templates, and we'll show you shortly some of these as we put them together into a package for you. And many problems with debtors come about because we have not put in great systems, and we haven't put systems in place about giving credit in the first place. And we're going to talk about credit checks and outsourcing shortly. So here's a snippet of the guide and credit control script that we put together. And we're happy to share this with you at no cost off the back of this survey. So the first one I wanted to share with you was our accounts receivable call scripts. And we've got several pages of these call scripts. And I'm showing you just very much the very first half page. And the first call script is something like this, where you might say something like, hi, it's Anne from Q2, and I'm calling to see how you are, how your team are, how your family are doing while we're all working through this COVID-19 situation. And then at that point, we have a bit of a chat about how they're going. We use the spin technique. We're getting some situation questions in. And then we'll move on to the real purpose of your call by saying, I'm also calling as our records show that we haven't received payment for our invoice for however much it is. I know it's a difficult time, but I was hoping you might be in a position to arrange payment today. And then have a chat about, can they pay today, or can they pay, or what the situation. And if they say, yeah, okay, I can pay, then the script might go something like this. Hey, that's great. I really appreciate it. Would you prefer to pay by credit card or direct credit? And if they want direct credit, you say, great. I'll send you our bank account information straight away after this call, and I'll keep an eye out for your deposit. Or maybe they want to pay by credit card, but just say, hey, great. Do you have it on you so we can give me the details over the phone? Oh, thanks. I'll process that payment straight away after this call. Thanks for working with us to resolve your payment so quickly, and have a great day. Thanks again. So as I've said, that's the very first script that we have, and we have 3, 4, 5 different scripts for different situations. Some of the scripts cover situations where you can't actually get hold of them and you have to leave a voice message, and then you follow that their voice message again and then again. And so the scripts follow that process as well as some of the email scripts that you can use if you need to email them because you can't actually get hold of them on the phone. So these scripts are really, really valuable for your admin people who are responsible for debt collection, because it allows them to just follow the process, and particularly when you have a flow chart. So, you know, at what stage is the debt collection at? Are we still at the hey? You know, do you realise something's outstanding to the point where you've been following up for several months and you're not getting anywhere, and you need to get tougher to collect those debts? Now, these call scripts are really, really helpful for your admin team when they make those calls, because let's face it, nobody really enjoys doing debt collection calls, so this helps a lot. The second thing is we have a credit management guide, and the credit management guide covers things such as an overview, which I'll go through shortly. It covers things like your terms of trade, your billing processes, your payment terms, how you can automate your billings and payments, and how to review your debtors and record all contacts that you have with your debtors. It also covers some of the privacy considerations that you need to be aware of, and we also include some additional strategies to maximise prompt payment. So this little snippet here is just the overview portion of the credit guide that we've got, which is 5 or 6 pages. And it just goes over some of the things that you need to be really, really aware of, and what you need to make sure that your credit management strategy includes and focuses on. So if you want a copy of the debt collection scripts and the credit control or credit management guide, please tick the box in the exit survey that you'll complete when at the end of the webinar, and we'll send it to you by email, free of charge. So next up, I want to talk about credit control services. So long as we're being emphatic and giving clients choices, we can talk about how we are going to get paid. And remember, as I said before, we need to have backbone and heart. And the backbone is sharing that, hey, you're running a business too, and you have a need for cash flow. Whereas heart is a part about being emphatic, flexible, considerate, respectful in your approach. Now, thinking about your credit control, if it's appropriate, you might consider outsourcing this so you can free up your time. It's also good sometimes to give it to another team member to be in charge of debt collection, because sometimes we're actually too close to our own customers and somebody else can actually do it better. If you do outsource your credit control, you do need to build a good relationship with your credit control services provider. And the other thing is that you need to ensure that you train your administration staff for this role if they're handling it internally, and provide them with a process to follow and also performance standards. The performance standards really should be written down and part of their KPIs in their job description. And you should also think about giving them timeframes for invoicing of services and sending out statements and the daily incoming receipt reconciliations so that you can automate system reminders. Now, on the subject of automating reminders, there is absolutely nothing worse than your data system sending out a text message or an email reminder or an invoice that's already been paid. And this can happen if your administration people get behind with their daily receipt reconciliations. So in other words, the client has paid or the customer's paid, there hasn't been reconciled to an invoice, and the system automatically sends out a reminder for that invoice which actually has been paid. And that really is not a good look. So I do recommend really, really strongly that you are proactive in making sure that all your receipts are reconciled daily to your invoices. And make sure that is somebody's specific responsibility to ensure that happens. And remember also that good credit control is not an ambulance at the bottom of the cliff, but it should be part of your own ongoing best practice. And you can use the content from us that we will provide to you, as well as a credit manager, whether that's an internal credit manager or an external credit manager, to improve your debt control processes. So these are the people that we recommend that you may want to use for your credit checks when you're taking on new customers. You don't want to inherit other firms' non-paying customers, even in the current difficult economic climate. So credit checking really should be a standard part of your onboarding process, and that's why we include it in our cash flow management service. So check out these suppliers if you are looking for somebody who can do credit checks for you. So now we've talked about best practice with your debtors and how to avoid working for people who can't afford to pay you. And now it's time to talk about what you need to be doing going forward to maximize your own cash flow. So some of these concepts you may have heard before, because if you've come to our business continuity planning webinar, and if this is you, then listen for the distinctions and make some notes around the actions that you will take, as we'll be asking you for these actions in your feedback survey at the end of the webinar. And if you missed our previous webinar or webinars, you can listen to them on our website. You can go to q2.net.nz/resources/webinars, and all the webinars we've held since the beginning of the year are there on our website, and you can listen to them on demand. So the other things we're going to cover now are briefly your cash conversion cycle, your business 101 cycle, the 7 causes of poor cash flow, how you can get runs on the board quickly, what bank assistance is available, and also some of the government support and tax considerations that you might want to be aware of. So one of the most important ways to improve your business is to shorten your cash conversion cycle. In other words, get your cash moving quicker, get it coming in quicker. And what's super important in these times of crisis is that all businesses speed up their cash conversion cycle so that the economy keeps moving and working. So paying your suppliers more slowly just creates problems for other businesses who most likely are suffering just as much as you are. So let's look at a real example. Who's a wholesaler? Now this wholesaler buys stock from suppliers and on average must pay the suppliers, say, 45 days after buying the stock. But the stock doesn't sell the moment it comes into the warehouse. Some of the stock may sell quickly, but other stock will take quite a bit longer to sell, and eventually some stock may even have to be discounted to get it to move at all. So in this example, on average, the stock is held for 60 days in the warehouse before it is sold. Now, when stock is sold, credit terms are provided to customers. But as we all know, a number of customers are not going to be observing those credit terms. And so in this example, on average, it takes another 60 days for the customers to pay the business. So now we can calculate the cash conversion cycle. First of all, there's 60 days average stock holding, plus another 60 days to get paid by the customers. So 60 plus 60 is 120 days. Then we take off the 45 days credit that are provided to us by our suppliers. So in this example, the cash conversion cycle is 75 days. That's quite a bit of time that's taken for the cash not to be in your system. Now, in difficult times such as now, we need to ensure that you have a plan in place to try and shorten this cash conversion cycle. And this is a process that we would recommend that you do as part of your business continuity plan, because cash flow is really, really important. In fact, using the numbers from your recent management accounts, which probably be up to the end of July or even the end of August next week, we can work out the above numbers and calculate your cash conversion cycle. And from there, we can discuss with you how we may be able to work together to shorten this cash cycle up and free up more cash. So for example, let's just say your debtors are $50,000 and your turnover is $500,000 per annum. So if you can reduce your cash conversion cycle by just 10 days, that would release $13,700 to you. And I'm sure that's cash that you could really do with right now. So the beauty of this is, hey, you don't have to sell any more product and you don't have to incur any more expenses. Just by changing your processes, you can have cash released by reducing your cash conversion cycle. So basically, it's free money. We recommend you incorporate a review of your cash conversion cycle as part of your business continuity plan or your forecast, so as to free up as much cash flow as possible. And we'll talk about this more shortly. Another area to focus on to improve your cash flow needs to be what we call the Business 101 cycle in these difficult times. As we often tell our clients, there's a massive difference between profit and cash. Profit is what you pay tax on, but cash is the oxygen that your business needs in order to survive. What is so important here is that, as well as improving the cash conversion cycle, that you make plans to maximize your profit at the same time, that you finance your business correctly. So let's walk through this Business 101 cycle. So starting at the top with you as the business owner, you will introduce some cash into the business so that you can buy assets, and you may also borrow cash to purchase assets. Those assets are used to generate a profit. And how you increase profit is by improving revenue or sales. And this can be quite difficult in these challenging times, but yes, it is still possible. Or to improve profit, you can increase margin or efficiency, or you may be able to trim your overhead expenses. So now is a very good time to be looking closely at potential new revenue lines, new potential customers, and perhaps a pivot in your sales strategy, or what you can do to avoid losing existing customers. So at the same time, you ought to be looking at how you can improve your margins via efficiency gains, perhaps better purchasing, or a reduction in errors and wastage, or simply discontinuing with products or services that have a poor profit contribution margin. And once you've derived your profit, then you need to turn that into cash. As I mentioned earlier, the profitable businesses can and do go broke at times like these. You need to be looking at how you can maximize your cash flow using strategies to get paid quicker, reduce stock or work in progress, or by negotiating better payment terms with your suppliers. Now is not the time to be slow or lenient on debt collection because we need to keep the money spinning around in the economy. Likewise, you need to be really careful about reordering stock. Can you operate with less stock, or are there items that are likely to be in short supply because of supply chain disruption? Other areas to help improve your cash flow are through better terms with your financiers. Can you go onto interest only, for example, on some of your loans? And I'll cover more financing ideas shortly. And likewise, there are many tax concessions available right now too, so you want to make sure that you access them. And once again, I'll go through the tax concessions that are available in more detail shortly. There are generally 7 causes of poor cash flow, and in the past, we've run a number of interactive seminars on this topic with our clients. But in summary, the first reason for poor cash flow is the accounts receivable process, and we've already covered some of this earlier in today's webinar. The second thing is our accounts payable process, and this is where perhaps we have lax controls over our creditors or our internal ordering processes. Perhaps we're missing out on prompt payment discounts, or we're not negotiating sharper pricing with our customers. These are just a few of the things that you need to think about. The third cause of poor cash flow is our inventory or work in progress process. So poor stock or WIP includes things such as pilferage or slow moving and obsolete stock, or maybe jobs are just taking too long to complete and invoice. Maybe we have damaged stock or too little or too much stock. There's a lot of efficiency losses and efficiency gains in the stock and work in progress area. The fourth thing to think about is whether or not you have appropriate debt and capital structures. And this is when we might be inappropriate if you use, say, overdraft or credit card or high interest debt to fund long-term investments. And how do we fund working capital? Or are we taking too much cash out of the business ourselves as personal drawings, and that's depriving the business of cash? So poor debt and capital structure also includes decisions such as how and when we use bank debt, how and when we make tax purchases to pay our tax, and also how much personal capital we should be putting into business to fund the business. The fifth cause of poor cash flow is perhaps our overheads. And at this time, we should all be looking at reducing our overheads of all unnecessary expenditure and ensure that we're getting return on investment on our discretionary spending, such as marketing and advertising or consultancy services provided by people such as ourselves in helping you run a better business. The sixth cause of poor cash flow may be that your gross margin is too low. For most businesses, gross margin or gross profit is one of the most important measures as it measures business efficiency. Some businesses don't even know what their GP is or what it should be. Most of my business clients who I coach are really focused on this particular measure because it is so important to their success. And it's important to know what's the best GP in your industry. And once you know that, then you can put processes and systems in place to work towards achieving that best practice GP. And then finally, the last cause of poor cash flow is maybe that just sales are just too low. Now, most businesses look at this measure first, but it can be one of the hardest to fix, especially in times like now. And it can cost a lot of resource to increase sales, and sometimes the other 6 causes of poor cash flow are actually much easier to fix. Part of our cash flow management coaching service involves the review of each of these 7 causes of poor cash flow so that together you can make a plan to free up as much cash as possible. We have extensive resources that we can share with you throughout this process, so that you can implement the ideas with real power. So how can we get some runs on the board quickly? Just think, perhaps, can you outsource your credit management? But be careful here, because if you suddenly enlist the services of a credit controller or a debt collector with customers who you know are unlikely to be able to pay you, then you risk irreparable damage to your brand. So if you already have a credit manager, then use them for your customers that you know should be able to pay you during these difficult times. And don't allow those customers to use the current crisis as an excuse not to pay. And if you don't currently use an outsourced credit controller, this is something we recommend that you implement as part of your long-term commitment to your overall credit management. You also need to train your administration and sales team. You need to be selective about which clients you take on and employ good onboarding processes, which involves and includes credit checking. You're most likely going to need to deal with customers directly, those ones who can't pay you. So remember the points I made earlier about being emphatic with these customers, and use the guides and script that I showed you earlier to try and get the best result that you can. You also may need to revise your terms of trade and the way you put your proposals together, and make sure you don't perpetuate poor practice into the future. Once again, we have plenty of ideas we can share with you on a one-to-one basis as part of our cash flow management coaching service. The strategies you adopt here need to be tailored for your own particular business. And remember to look at your billing process. Get customers onto repeat or automated invoicing where you can, so that it will never slow in getting your invoices out. And consider if it's possible to create contracts with your clients with more regular invoicing. So for example, can you ask them to pay a deposit on acceptance of a proposal, or can you get them to agree to interim invoicing or progress payments if that's appropriate? If you have additional or out of scope work, make sure you communicate that early and get an acceptance from your customer in advance of doing the work, so as to avoid a complaint or invoice query or a dispute after the work has been completed. Also check that you've revised your price list to ensure that the margins you expect are being preserved. And a great way to do this is to use any time that you may have available, perhaps as a result of the current lockdown, to look back over the last few jobs you've done to identify if the returns you're getting match what you expected when you issued your quote. Likewise, if you're in retail or hospitality, you can use this time of lockdown to review your margins and pricing. Also want to talk about automation, because with so much cloud-based technology now, it's a great time to be looking at how you can use automation to free up your time and your cash flow, as well as how you can use repeating invoices, and consider how you can move your proposal and quoting system through to a paperless and online invoicing option. And last but no means least, take a look at your management controls and procedures and processes, and think about your spending and invoicing. For example, set some limits around what stock or products can be ordered. Consider how you can reduce your levels of stock or improve your efficiency in operations. Whatever you do, don't keep working for customers who don't pay you. You are running a business, and right now you need to reduce your risk wherever you can and avoid bad debts. We'll cover some banking facilities and fee funding separately next. Often, one of the highest overheads in business are the interest costs that we pay to our banks and finances. If you add the principal reductions required on the loans as well as the interest, then this can be a massive drain on our businesses at this time. So here's a list of the ways the bank or your other financiers may be able to help you. So for example, you could increase your temporary overdraft facility or review and extend trade credit. think about asset finance funding, or apply for a loan repayment holiday, a deferment of repayments, or going on interest-only terms. You may be able to extend the term lending period and maybe apply for short-term and hardship loans, or maybe short-term mortgage holidays, and of course also consider your business credit card options. Part of your cash flow improvement or business continuity plan should be a discussion with your bank or financiers about how they can help you. And an independent advisor such as Q2 can help you with this, because you can talk through this with us first before you go to the bank to talk about what your options are. So the New Zealand government has announced a massive funding of $12.1 billion to support New Zealand businesses, and they've announced that over the last 6 months. So this includes things such as the $500 million boost for health, the $8.7 billion in support for businesses and jobs, and $2.8 billion for income support and boosting of consumer spending. This package is one of the largest in the world on a per capita basis, representing about 4% of GDP. And on top of the initial COVID-19 wages subsidy, we have the wage subsidy extension, and now the 2-week resurgent wage subsidy. So the COVID-19 wage subsidy extension, that payment will be available to support employers who are still significantly impacted by COVID-19 after that initial wage subsidy ended. The applications for the extension are open from the 10th of June 2020 until 1st of September 2020. So there's still time to make an application for that extension. The resurgent wage subsidy will be available to support those employers who are still significantly impacted by COVID-19 after the previous wage subsidy ends. Now, to be eligible for the resurgent subsidy, you need a revenue drop of at least 40% because of COVID-19 for a 14-day period between the 12th of August to 10th of September 2020, and that 40% drop is compared to the similar period in the previous year, which is 2019. And the applications are open for the resurgent subsidy from the 21st of August through to the 3rd of September 2020. So there's not a lot of time. If you need to make an application, you will need to get that done before the end of next week. There's also the Small Business Cashflow Loan Scheme. If you employ 50 or fewer staff, you can apply for this scheme, and the scheme will loan you $10,000 to every firm plus an additional $1,800 for each full-time employee within your business. The loans will be interest-free if they're paid back within a year, and then if they're not paid back within a year, at 3% per annum after that, and no repayments are required for the first 2 years. When applying for the loan, you need to be able to declare that you are a viable business, and your business must have experienced a minimum of 30% decline in actual or predicted revenue over the period of a month compared to the same month last year. And applications for that loan scheme are open from the 12th of May to 31st of December 2020, and you apply through the IRD MyIR portal. The IRD also has some leniency in regards to late payment of taxes, the write-off or reduction of penalties, or interest arrangements. However, approval is not automatic, and you do need to have a strong fact-filled case in order to apply to the IRD. There's also the temporary loss carryback scheme, and businesses are expecting to make a loss in either the 2020 tax year just passed or the March 2021 year can use the loss to offset profits that they've made the year before. In order to be eligible, you need to have incurred or expect to incur a loss in either the 2020 year or the 2021 year, but you must have made a profit in the year before the loss was made. And companies also need to make sure that they meet the conditions to be eligible. And the conditions are for a company that it's maintained 49% common ownership throughout the loss year and the preceding profit year, and that the group has retained 66% common ownership through the loss year and the preceding profit year. And thirdly, you also have to make sure that the company has sufficient imputation credit account balances to cover any refund. So this is quite a technical and specialist tax area. So contact Q2 if you would like to explore your eligibility for the tax loss carryback scheme. So we've set out for you the mindsets that you need to have in these difficult times to be emphatic and to have backbone and heart around debt collecting and how to avoid shying away from selling. We've also shared best practice around credit control and debt collection, and we've shown you the guide and the scripts that you can ask and that you can use every day. We've covered how to free up as much cash flow as possible by looking closely at your cash flow conversion cycle and your Business 101 model. We've looked at the 7 causes of poor cash flow and how you can get runs on the board quickly to improve cash flow, including what support is available from the bank. And we've shared in general terms some of the support that's available from the government and other sources. So now it's essential that you decide what you're going to do. And as we said before, clearly doing nothing is not an option. Now's the time to put the oxygen mask on yourself and make a plan to get through this crisis. And even if that plan is closing down your business or re-engineering your business, you're better off to have made that decision sooner rather than later to preserve whatever cash flow you can. And part of that planning is to surround yourself with the experts, and we are here to help you. So do remember to focus on what you can do. As we've already mentioned, we've developed the guide to credit control and some detailed scripts for debt management, and you can have those at no cost from us. What we also want to share now is how we can help you even more, and then we're going to ask you to share your feedback and what actions you're going to take. As we've said before, we can and want to help you in these challenging times. With all our clients, our recommended strategy is to complete a business recovery plan. And many of you are well on the way of doing this and have been working with us, and we've been getting some fantastic feedback about how helpful the whole process is. So if you haven't yet done your business recovery plan, now is the time to do this, as it will form the great foundation from which to build your cash flow improvement strategy. And to do it, you can meet with us online or face-to-face. We can do it together either as one session of up to 4 hours or 2 shorter sessions of 2 hours each online. And this Q2 service, you may be eligible for regional partner network funding of 50% or even perhaps 100%. The advantage of this approach is that we'll be able to make sure that you get all the entitlements and the support that are available to you. We also believe that combining your expertise with our expertise will result in a far better plan overall. And we've reduced our fee to 70% of our normal rate to support you to take this option. And for those of you who have already done your business continuity plan, we recommend you work with us to complete your cash flow forecast. And many of you are using these forecasts as a basis to support finance applications to the bank. Of course, you should also be acting as like your own bank too, because you've advanced money to your business and you need to make sure that you'll get paid. And preparing the cash flow forecast together with us allows us to share with you many ideas of how we can improve your cash flow in these challenging times. Your cash flow forecast is a step that identifies where the improvements can be made. And having a cash flow management initial coaching session will help us show how to implement the ideas from the forecast. Consider it an opportunity for us to show you the full extent of what's possible in your business. We are very confident that once you see the value and the improvement in your cash flow, that you want to continue working alongside us on ongoing cash flow movement management coaching. But at this stage, we're only asking you to commit to one session with us. We appreciate it may be difficult to commit to spending money at this time, and that's why we reduced the cost of these options to less than our normal rates. We expect that through a combination of business recovery planning, forecasting, cash flow management coaching, and the cash flow benefits will far outweigh our fee. And more importantly, it's about helping you get moving as quickly as possible. And as I mentioned, funding may also be available through the regional partner network. So contact us so that we can help you apply for funding for these services. Another option is letting us help you calculate your cash conversion cycle. Once you know what your cash conversion cycle is in days, then we can look for ways to reduce that number and speed up your cash flow. And we're also offering a complimentary 60-minute business review meeting. So if you would like to have a complimentary discussion about where your business is sitting and your options that are available, we're happy to offer that to you as well on a complimentary basis to help you decide how you're going to move forward. So thanks for making the time to attend this webinar. We hope that we've given you plenty of ideas to think about and some clear options on how we can support you. Before I go, I just want to share this Stephen Covey quote with you, and he says, "When you show deep empathy towards others, their defensive energy goes down and their positive energy replaces it. And that's when you get more creative in solving problems." So let's make sure our approach to our own cash flow challenges that we approach with empathy and get through this difficult time. And just a heads up that next month we'll be running a webinar on knowing your numbers. And that's going to be on Wednesday, the 23rd of September at 2 p.m. So mark your calendar now for this important webinar. We will demystify what the annual financial statements are and how to read them. And you'll learn what the key financial reports tell you about your business. You'll learn how to identify strengths, weaknesses, and trends, and discover why your bank account balance may not reflect your profits. It'll also help you identify how you may be able to protect your assets and discover key drivers of business value, and learn how to measure your business efficiency to drive improvement. Plus, we'll provide you with a complimentary guide to your financial reports. So please register your interest about attending the Know Your Numbers on the 23rd of September 2020. And thanks again for making the time to attend this webinar. We do appreciate your time is really valuable. We hope that we've given you plenty of ideas about how to improve your cash flow and ensure that you get paid, as well as some clear next steps for you and your business. So hopefully we'll have you all attending our next webinar, Wednesday, 23rd of September at 2 p.m. And that's all from me. Have a great day. Bye.